everyone, Daniela Cambone here. Before we get to our interview today, just wanted to wish you a very great start to your 2025. May it be prosperous and above all else healthy. I also want to invite you to reach out to one of my incredible colleagues at ITM Trading. It's a perfect time for you to either reconnect with us or connect with us for your first time. Let us help you build a strategy centered around owning precious metals. Call us today or book your Calendly appointment. There's a link below in the description. Pick the day and time that works best for you. We'll talk soon. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show. We still have our 2025 outlook, and with me today is Edward Dowd, who has just issued an incredible report basically detailing how we are in the danger of heading into a deep worldwide recession. We're going to find out why he thinks that. Edward, welcome back to the show.
Thanks for having me on, Danielle. It's great to be here.
Yeah, just a quick background notes on Edward for those not familiar with him. He worked closely as an advisor on RFK's campaign, and he's a founding partner with Phinance Technologies, which has just issued this very, very terrifying report. Edward, I want to obviously get your feelings as to why you think we're heading into a dangerous recession. A financial crisis worse than 2008 is what you call it. But first, no shortage of breaking news here. I know you've been following it, as have I, all the executive orders being signed by new President Trump. Is there one that you feel could really have an impact here?
In terms of the U.S. economy, the impact is shutting down immigration. That's been the elephant in the room for the last 2 years. It's been an economic variable that a lot of people haven't focused on, and it really goosed the economy for the last 2 years. And that's why it's one of the major reasons President Trump was elected. Letting in 10 to 15 million illegals is unprecedented in American history. Net legal migration is 1 million a year. So this had a huge economic impact. It's a big part of why we had these crisis level deficit spending, because if you think about what we did, we ran 8% budget deficits to GDP. Mm-hmm. The last time we did that was the great financial crisis. So what was the crisis? The crisis was getting the Biden team reelected and letting in 10 to 15 million illegals short term had an impact on the economy via goodies to some of them directly, the NGOs who facilitated all this, the accommodation for housing. But it's net not a long-term productive asset that we spent $2 trillion the last 2 fiscal years to do. And Trump's halting of that will reverse that sugar juice, in addition to all the government spending that the Biden-Harris administration did with government workers and whatnot.
Now, I'm assuming you started work on this report months ago, right? Does this executive order change anything in your current report or on?
No, it's what we expect. It has to be done because the country was going to be torn apart. You can't let in 10 to 15 million illegals this quickly and not have societal impact. So one of the reasons Trump was elected was to stem the tide of this and restore the middle class. A little background. We're calling for we have these early cycle indicators that have had good historical track record. They showed a recession manifesting supposedly around the end of 23, beginning of 24. That didn't happen. There are other economists calling for the same thing, and everyone's been befuddled as to why that happened. Well, 2 things happened: massive illegal immigration and unprecedented deficit spending. So fiscal dominance. It's an economic variable we haven't seen in the U.S. economy for a long, long time. And that is not sustainable because the bond market is telling you you can't keep doing that. And Trump was elected to reverse that. So a recession is actually proof that Trump is restructuring the economy. If we see accelerated government spending, it's more of the same. So, as much as people fear a recession, it's actually needed.
Can you explain why the influx of migrants would cause or lead to a greater recession or financial crisis?
Well, it's the halting of the flow that's going to lead to a correction in the economy, because that's the only thing that's been holding up the economy the last 2 years. If you look at PMI and industrial capacity utilization, which is usually a good indication of economic activity, it's not good. So it's been befuddling economists why the GDP prints have been so strong. There's obviously government spending that's helping the GDP. There's been a lot of discussion about the payroll numbers. We had an 850,000 payroll revision in September, down. We're going to get another revision down in February. So, the real wages for the American worker were minus 2% heading into this election. That happened in 1980 with Ronald Reagan. Then we had a recession. We had a recession in 92 with Bill Clinton, and we had real wages of minus 2%, and that's why he was elected. So Trump has a mandate. Trump has to restructure the economy away from fiscal dominance, illegal immigrants, towards manufacturing, tax cuts, deregulation, and there's going to be a hiccup in the economy. The housing market, in our report, we examine the housing market. It's stagnant, and we examined some early warning indicators that suggest it's gonna have some problems. In addition, there's a global real estate problem. Prices have been trending down in Europe and China, and that's going to have an impact eventually with the feedback loops to the banking system.
So if someone's on the sidelines about buying a house this year, what should they be doing? Staying on the sidelines, waiting for that crash?
Well, what's a crash? 20%, 30%, we don't know. But what we do know is there's going to be supply coming in the summer and the fall.
And across the nation, are you seeing pockets?
You got to remember, real estate's local. But if I was in a blue state that had a lot of illegal immigrants, that's where the deals are going to be.
Not to get too philosophical or deep here, Edward, and I don't know how much you were following Pope Francis's message on migration, but it caught my eye. It was on Italian. He gave an interview in an Italian newspaper, so I was watching that, and it was really his first comments on Trump. And on the flip side, he was saying how exporting these migrants would be the largest crisis, and that's not the way to go about it. I just think, there's really two optics and two stories here, and we often forget about the economic burden, right?
Yeah, I mean, I don't know what Pope Francis said, but I mean, anybody who is on the more progressive side, which Pope Francis is, are going to pull at the heartstrings. The problem with letting in people this quickly and this large amount of it is societally a problem. Net legal migration is 1 million a year. We can handle that. We can't handle 10 to 15 million. We didn't know who came in. A lot of them weren't vetted. There's a problem.
I want to also, before we move on from the executive orders, just want to get your thoughts on this, because I thought of you with the pulling out from the World Health Organization and the Paris Accords. Comments on those?
I think it's great. I mean, obviously, the WHO is an institution that is very totalitarian. It's headed by basically a communist, Tedros, and they're all about power, and they need money from countries to sustain their global grab. And so that's great. We pulled out.
Well, along those lines, then what did you think of the Fauci pardon?
The Supreme Court has weighed in on this. There's a case out there that says that if you accept a pardon, it's an admission of guilt. And to preemptive pardons, it's like the Minority Report movie with Tom Cruise, where we're going to pardon you for future crimes you might be charged with. So this is unprecedented. And they gave him a pardon back to 2014. It covers 2014, so people are investigating why. There's suspicion that that's when gain of function was funded in all sorts of places, including Ukraine.
So what do you make of, because Biden's reasoning, and I'm speaking also in terms of the pardons he's extended to, basically all of his family, was that, that it's not an admission of guilt. It's just that people will go after them. So he's hiding behind that.
Well, the Supreme Court has weighed in on this. It is an admission of guilt, and people will go after them because crimes were committed.
So let's just get back to your report here. And I understand people have to get the report to really get the nitty gritty of it all. But I'd love to just get the groundwork or the play-by-play of how you think this rolls out, because I know a big part of your thesis is the stock market right now, if we're looking at it, Edward, is not showing any signs that we're heading into this despair that you speak of. Why is it not telling us the reality of the situation? Why is there such a disconnect?
Yeah, so the stock market usually historically has been kind of a leading indicator. There's a case to be made that that's no longer the case. That 95% of all trading volume every day is passives or algorithmic trading. Back when I was during the 2008-9 crisis, 75% of the trading volume was fundamental investors. So a lot of the stock market reacts to headline news, and the economic news has been good, but that's going to change under the Trump administration. We didn't do the work, but there was a report called the QCEW, which is the quarterly census of earnings and wages. That's the reality of the non-farm payrolls. The non-farm payrolls are estimates, and then the book report comes out lagged. During my whole career, we've never cared about that report. But some other people did some work, and there's an interesting chart that shows the difference between the two series, which are done by the same government agency, the Bureau of Labor Statistics, had a 7 sigma deviation in the last QCEW, which was June. And that's a 7 sigma standard deviation to the downside, indicates that the BLS was either bureaucratically incompetent or it was fraud or a combination of the two. So the payroll numbers are wrong. The QCEW drove the BEA, the Bureau of Economic Analysis, to start to revise down income accounts. The GDP we saw in Q3 will probably be revised down historically. And in February, another QCEW is coming out, and that will cause further revision. So we've never cared about the book report because the series over time is close, but it hasn't been close the last year and a half.
Do you think it was fraud? Or they're just incompetent?
No, I don't know. I'm not in the room. Me being an analyst, I think it's a combination of bureaucratic incompetence and fraud. But it doesn't matter. A 7 sigma deviation is all you need to know.
Okay, let me ask you this though, Edward, because we all know Trump has proven one thing: he's a media master. He doesn't want negative headlines, especially when it comes to the economy. So why don't you think at all costs he will do anything to keep anything propped up here?
Well, you have to assume he's going to continue the bureaucratic incompetence, and if he does, eventually the truth will come out. So I don't think it behooves him to hide what's coming. It's not. It won't be his fault, but if we don't get kind of a reset in asset prices, then that's probably because the government's accelerating spending, because you need credit creation. The only game in town right now is the government. If you look at other credit creation vehicles like credit cards and banks, they're decreasing credit. Ally Financial recently just got out of the mortgage business because there's no selling activity. They're selling their credit card business. So credit creation is the lifeblood of the economy, and it's going the wrong way in the private sector. And he's promised to cut government spending and take care of the immigration problem. So that by itself would slow slow the headline numbers. The real economy is already in trouble, as evidenced by -2% real wages. The employment survey, the household survey, and the establishment survey are different. There's a reason they're different, because actual U.S. citizens aren't getting jobs.
Right. So how do you think he's going to spin that?
I have no idea. If he was smart, he'd spin it the way we put it out in our report. He's inheriting an economic turd that was goosed by unprecedented deficit spending. And look, he could continue the same policies, but eventually the asset markets will react, especially the bond market.
I mean, it's really interesting. So you're basically okay. So this my other question is, when I know you will say the crack's already there, but when do regular folks, maybe not paying attention on the day-to-day, start feeling the pain?
Well, this report is for institutional investors, high net worth individuals, and family offices. It's not cheap. And so far, those who are buying it are mostly real estate professionals because they're probably already seeing it. The public market people think everything's hunky-dory and fine. This report will probably take off after asset prices start falling. Mm-hmm. That's how this works psychologically.
Yeah. Right.
But right now, it's mostly real estate executives buying our report, which is we didn't when we launched this report on the 9th, we said, I wonder who buys this. Mostly real estate professionals, and that's likely because they're seeing it.
Now, what happens if they ramp up the printing press? Can that save the day?
Well, when you say printing press, you need government spending, so you can't. The Fed can print money, but unless it's spent, it doesn't do anything. So the Fed printed money during COVID, then the government gave it out. So it adds to the national debt. People have to remember, when the Fed prints, it adds to the national debt. And they don't print just for the heck of it. Right now, people have to understand, why did the Fed decide to lower interest rates in September? People think it was to help the Biden administration. It was not. They started to see cracks in the employment numbers. They even called out that there was a question about the payroll, the payroll numbers. They see the QCEW as well. So they started lowering. They've lowered about 100 basis points. It's still, they're still behind the curve. Real interest rates are around 1.5% to 2%, which indicate tight monetary conditions. If you look at monetary aggregates across the globe, M2 is declining. That usually doesn't bode well eventually for the real economy. So the Fed lowering interest rates is not a good sign. It's goosed the stock markets temporarily, like it did in 2007, like it did in 2020. But it's not. It's before the pandemic. But there was one anomaly in 2000. They started cutting interest rates after the top in the stock market, and then the stock market went down 50% after that. So generally speaking, people think Fed interest rate cuts are positive. They are not.
How long do you see this recession lasting for? A year, 2 years?
Well, it all depends on it depends on President Trump's policies, because if he deregulates quickly, if his first 100 days are successful, this could be a short, brief recession.
Okay.
If there's any policy missteps, there's going to be problems. The thing that has us concerned is that this is global. There's a global real estate problem, and if you look at the economies of Germany and Japan, they're not doing well. Their stock markets continue to float, but that eventually corrects itself.
Yeah, Germany's in a disastrous situation. So that said, what's the game plan, Edward? How should we be preparing and protecting ourselves?
Well, for the institutions, we lay out a roadmap. For the common person, I've been saying for the last year, a little early, like Warren Buffett, just get some cash in your portfolio for dry powder. If you think a squall is coming, you prepare for the storm. You don't go to zero. Especially, I've told younger people, hey, look, don't get out of the stock market. Just raise 20, 30% cash in your 401k. And then when the stock market goes down and corrects, go back in. So this is, for the common person, it's just having cash to take advantage of opportunities.
I'm looking at gold prices right now. As we're speaking, of $36. What do you make? I mean, what's the gold price telling us given this context?
Well, the gold price, if you remember during the lead up into the financial crisis, gold was on a tear from a low of in 2002. Gold took off. It ended a long bear market and went into a bull market. That's because after the dot-com bubble, the Fed really did easy money. That found its way into the real estate crisis. They created another bubble. Gold will do well up until the flashpoint when, everybody in the market start to worry about the same thing. Gold will go down temporarily, like it did in 2008, 2009. But it's a long-term buy, because what we see is once the short deflationary pressures come and there's a recession, there will be a policy response by the central banks and a fiscal response. So there'll be a short deflationary period, then inflation. So we have this roller coaster, brief periods of deflation followed by inflation. And so we expect all the policy moves will create another round of inflation again. It's not pretty. It's like the 1970s,
right,
all over again.
Edward, where can folks find out more about your report?
FinanceTechnologies.com, spelled with a PH.
Yep.
At the top of our homepage is a link to the product page. With the package, you get a deep economic report, an executive presentation, and then Carlos and I, my partner, go through the presentation in an hour-long video.
Okay, thank you for that. Last thing, with this news cycle, things are in today, out tomorrow. We stopped talking about the drones, but I know you were covering it and watching it. Is it still a red alert flag that we should be eyeing? What was your take on that?
Well, I made a couple comments. I ignored it because I felt like it was a distraction before the inauguration.
Yeah.
It felt like a government psyop to me, quite honestly. The fact that the government wouldn't tell us anything was a red flag from the beginning. Even Trump commented on it as well. Look, I've joked that if you see the aliens, quote unquote, the aliens coming, that would set off a global level of fiscal government spending, the likes of which we've never seen, which is kind of what we need to save the current credit system. We're in this end game of you need constant credit creation at ever increasing levels to keep it going. And Trump is going to stop that and try to rejigger real growth in the private sector. It's not an easy task.
It's not an easy task indeed. Just one last point. Speaking of distractions, the warnings about tariffs coming for Mexico, Canada, February 1st, are those a distraction, just part of the art of the deal? Or do you think he's dead set on those 25% tariffs?
I think if you saw what futures did last night when he announced them, they dropped immediately. There was a big sell-off, but then they came back. The market's up a little bit today. I think the market's figured out that Trump, and a lot of people on Wall Street I talked to, it's a negotiating tool, and it's not anything to worry about until it's actually signed. So I think he starts off with the art of the deal, like the big hammer starts with the hammer, and then you negotiate to something else. So I think the market's figured this out, and I don't think we're going to see huge trade wars until the recession manifests, and there'll be more trade wars. But right now, I think this is just the art of the deal.
Edward Dowd, thank you so much for joining us. We'll see you soon.
Thank you.
And thanks for watching. We'll have more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show. Sign up at danielacambone.com, and please subscribe to our YouTube channel so you could stay on top of it all. Thanks for watching. We'll see you soon.